Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, welcome everyone. Welcome to Stocks Sniper Trading. My name is Ron. My partner is Dave. Welcome, guys. It is noon, 12 p.m. Eastern. It is Wednesday, July 9. So thanks everyone for joining. I hope everyone is having a great day today. And plan for today is we're going 4 hours from right now until right to the closing bell of Wall Street. We'll go through power hour. So it's going to be 4 hours right to 4 p.m. And the first 2 hours will be with YouTube. So thank you guys for joining. And then we're going to go private for the remaining 2 hours. Okay. And you guys are welcome to join SST at any time and participate in those private sessions with not just myself, but with Dave and all of the snipers in Discord. And you can utilize all of the SST trade ideas, signals, and education and everything else we offer here. Okay. Plan today is similar like what we did yesterday. We'll start off with gold, top-down analysis on gold, XAU USD from the daily, hourly, and we'll bring it down to lower time frames, 5 minutes. We'll see if there's any suitable setups, and then we'll move over and then we'll do a split screen with NASDAQ and US 30, and then we'll look at US indices going into the close of the market, okay? So just let me know that audio is okay. You guys can hear me clearly. You guys can see me, and everything is good to go. I'm on this gold chart right over here. Just kind of quickly recap yesterday's trade. If you guys were on the call with us, we took this trade right here at 11:15. I explained it clearly yesterday why I took that buy off of the bottom there, and we ended the call right over here at 1 p.m. And if you were continuing, like I had that 20% runner still in the trade, as soon as that bar closed above right at 1 p.m., that was a big 1 p.m. push at the new hour, flipping that zone red to green, just continuing to go through the fundamentals and then stretching it into the future. You can see how high we went, and we were very, very close to hitting that yellow line. We were just off by just a few pips, and that yellow line is a daily point of interest, okay? And that was around 3,310. And when it got up there, hopefully maybe you guys secured a little bit up there because that runner was going approximately 185 pips up there. So hopefully you secured a little bit. If you didn't, it came back, and look at what it retested. This zone that was red, as soon as you had that closing bar above, it took maybe another hour, 90 minutes till 2:30, and came back and retested this and continued push up. But then you see it's lower highs, lower highs, lower highs. So there's more offers in the market, and then you can see again, it came back in here, held one more time. There was a false breakout right over there, and then we continued from there, okay? So runners do move. If you do have some runners in the market, they can continuously bank, but you should still be securing a portion of your runner throughout the day when you're satisfied with some profit, okay? So let's start fresh again. We're all the way over here. And this is what's going on right now with gold. We're all the way up here at 3,308. We're close to the high of the day. We'll do a full top down. But first, before we do that, we just got to get into the news real quick. Just see if we're going to have anything this afternoon. So Forex Factory, London already has gone by. We've already done that session. We had a lot of UK British news in the market this morning. We also had the British Bank of England Governor Bailey speaking at 6 a.m. Eastern, high impact. If you were trading the pound at that time or the euro, probably saw some significant volatility at that time. And then we moved into 8:30. We didn't have any major 8:30 news. Dave navigated you through that session and hit a good trade with you guys. So shout outs to Dave and the snipers trading at the New York session. And then we moved into Wall Street, no news during Wall Street. And then we got into 10:30. Our weekly crude oil inventories came out. If you guys are trading crude oil, we always tell you, pay attention to the supply and demand and the weekly inventories of crude, because that can affect the price of the barrel going up or down, or stabilizing the price right now. We do have something on our session. So you see, just after 1 p.m., in just less than an hour, we have our US 10-year bond auction. So that will be coming out right now. The previous was 4.42 over here. And if we want to read more into it, we can open the folder, we can look at the detail. So this is coming directly straight from the Treasury Direct. Measures, what does it measure? The highest yield on 10-year bonds the government sold at auction, and the bid to cover ratio of the auction. So today we got the 10-year, and if I'm not mistaken, tomorrow at the same time we have the 30-year bond auction. Either, I believe it's tomorrow, Thursday. So we have the 30-year tomorrow and the 10-year today. So that does impact everything. It does impact the lower interest rates, because it goes into the 5-year. The 5-year kind of is your mortgage, your renewals, your 5-year. Then we go into the 2-year, and then overall it comes to FOMC with Powell, with his interest rates and being pressured by Trump to lower them. So we'll see everything, how it all boils down, but it's like from a top down. It goes 30-year, 10-year, 5-year, 2-year, then you get into your lower lending rates. Okay, so that's going to be very important today with us in our session. So we got to trade careful. It will affect the US dollar. There could be some volatility. I know it's showing a yellow folder, low impact, but still anything to do with treasury bonds, interest rates, I still treat them as if they are high impact, even if there is a yellow folder. Okay. And you can see the frequency of this. It's conducted monthly. Okay. And then just in our notes here, auction results are reported in an x.xx/x.x format. So the first number is the highest interest rate of the bonds sold, and the second number is the bid to cover ratio, the number of bids made per bid accepted. Okay, why do traders or investors care about treasury bonds? Yields are set by bond market investors, and therefore they can be used to decipher investors' outlook on future interest rates. The bid to cover ratio represents bond market liquidity and demand, which can be used to gauge investor confidence. Okay, so that's going to be this afternoon. We'll see what that is. We also have at 2 p.m. FOMC meeting minutes. Okay, so that's the summary of last FOMC when they had the federal funds rate, and actually that 2:30, you recall that Powell was speaking at that time. So this is a summary of exactly what happened during that meeting. And notice it is a red folder indicating high impact. It's not as high impact as the actual FOMC meeting, but still we have to take this very serious. We have to manage our trades if we're in a trade at this time, or if we're looking to get into a trade, we just maybe have to let this dust settle, and then we see how everything moves after that. Okay, so we do have today, this afternoon, a 10-year bond auction and also the FOMC meeting minutes. Okay, and then just moving into earnings, do we have anything today? Pre-market today, not much going on earnings-wise. After hours today, at the closing bell, we got AZZ Inc. at 4:15, Best Furniture, and Method Electronics. I don't think these are going to be a high impact or move the S&P or NASDAQ or Dow Jones specifically. I don't pay too much particular attention to these if I'm not directly trading them through buying shares of the company or through options trading. So I don't think that this is really going to impact the markets. I look for those big names, the big names like Nvidia, Tesla, Apple, Microsoft, Bank of America, BlackRock, and things like that. I look for those big names that actually can move the markets. Okay, just some news today. Congratulations to Nvidia, and if anyone is an investor in Nvidia, I do hold shares of Nvidia. I'm holding them for multiple years. It's part of my retirement plan. I do hold a lot of Apple and Nvidia and other securities. Nvidia is a sound security that could continue to appreciate going into the future. And I know some of you snipers took advantage of that when it dropped, when the market was correcting and dropping and bearish, and it went below $100 per share. It actually hit, I believe, 92. That was a great opportunity. When there's blood in the markets, it's a good time to take advantage of that. So a lot of investors and traders get scared when the markets are red. I see it as an opportunity to start positions on sound securities on a discount if you do believe in the actual company. So Nvidia today becomes the first company to reach $4 trillion market cap. So that's big. And it just hit an all-time high, I believe $162, $163 per share, if I'm not mistaken. Yeah, 163. There it is. It's up almost 2% right now. So $4 trillion company. That's that's a big milestone. Okay, so the AI giant's furious recent rally helped it clinch another historic milestone. So congratulations to anyone that is a shareholder of Nvidia. And what else we got going on in the news here? Okay, so Trump is always in the news. That shouldn't be a surprise. But Trump's search to replace Powell gets louder. Okay, so you might hear this upcoming in the next few weeks, that Trump is trying to replace Powell because Powell is not doing what he wants. Powell is staying steady with the interest rates, and Trump wants a decrease. So we'll see what's going on with there. That's like a soap opera. That's developing news for traders. That's what we look for. That's our guiding light. That's our Young and the Restless. If you remember watching those things back in the day, I used to. I got two sisters and my mom. I remember coming home from school. That's all that was on the TV at that time were those daytime soap operas. So this is a soap opera for us traders. And also, tariffs are in the news. So more Trump tariff letters are on the way. We'll see what's happening with those. Goldman Sachs is in the news. What else? Copper market. So if you're a copper investor or trader, you probably saw a big push in copper. Why? Because the copper market is in turmoil as Trump threatens 50% tariff on any copper coming into the United States globally. So that's big. And that affected yesterday, if you guys saw that significant jump on copper yesterday. So, these tariffs do affect everything. Samsung's latest foldables put Apple on notice. Okay, so new foldables coming out from Samsung put Apple on their toes. What else do we got over here? Just going through this. BlackRock, they're always in the news too. One of the biggest corporations in the world over some nations. So when you're talking about assets under management, AUM, you've got USA number 1, China is number 2. It's always been held number 3 from Germany, but last year BlackRock took over 3rd spot and went ahead of Germany. So assets under management globally, it's always been run by countries around the world, and you have USA, China, it was Germany, now it's replaced by BlackRock taking number 3, and they're eyeballing China for number 2. This is a powerful corporation, BlackRock. So the BlackRock's cash-like ETF eclipses an infamous long bond trade. They're making some noise. They're also accumulating a lot of Bitcoin as well with their IBIT ETFs, and they're giving MicroStrategy Michael Saylor a run for his money too. So it's fun watching those two go toe to toe. And we'll see who comes out in the future. If Bitcoin is going to be anything, these guys are stockpiling just in case it is going to be something. Oil dips as massive U.S. stockpile gain outweighs UAE bullishness. What else we got? Trump says he's weighing federal takeover of Washington, D.C., and that's what we got going on in the news. There's always some top gainers in the stock market. We don't normally talk about this, but we will eventually start talking about this. So these are names maybe you've never heard of, but there's a lot of names that trade on the stock market that are not just Nvidia and Tesla and Blackstone. You got other names like over here, pharmaceutical companies, Rhythm Pharmaceutical. Maybe they passed something. It passed a clinical 2, clinical 3, like a cancer research, or they got big news, a big catalyst. They're up $20 a share, and they're up 31% right now. You got Verona Pharmaceuticals, similar. Maybe they launched something, they got a catalyst, so you can click on it and read about it. They're up 20%. Bloom Energy is up 20%. The AES Corporation is up almost 17%. And then when you have winners, you're always going to have losers, just like us as traders. Some days you win, some days you lose. And then there's top losers. You can see there's one company right here. Bitmine is down 45% today. So there's a lot in the red. There's some in the green. You can have a scanner to scan for these pre-market gainers. And I can't wait to get more into that with you guys. Okay, and so that's what's going on the news right now. When we're looking at the overall markets, S&P is up 0.25% right now. Dow is up 0.12%. NASDAQ 0.5% up. Russell up 0.4%. VIX, we do have some volatility in the markets. And gold, you can see it's barely even moving right now. It's 0.03%. It's pretty flat on the day right now currently, okay? Now let's just move into Discord. We could be looking for something when we get into looking at NASDAQ. Maybe we'll look for something around 22,810. We'll take a look at that as we get into it, okay? And in Telegram, over here, guys, there's a free Telegram channel over here for you guys available on YouTube. It's pinned at the top of the channel, showcasing what we do here. Okay, so this is our YouTube live session. There was a trade idea sent out to you guys earlier today, just prior to 11, for a sell setup at 3305 on gold. We'll take a look at that as well. This was a recap of Dave's session with the snipers in the Zoom session, looking for a good buy on gold and caught it. Congratulations to those that secured 50 pips and had a great time with Dave in that session. Guys, I just want to read this really quickly. So stop searching and start noticing. Everyone is chasing the next big thing in the markets, the next get-rich-quick theme. The perfect strategy, in our opinion, is the secret setup, the secret setup, the magic indicator, all those things. But what if the answer isn't out there? Because it's already right in front of you. Success in trading doesn't come from endlessly hunting for new tools. It comes from mastering what you already have and what you already know. It's just polishing up, refining your process, and building consistency over time. So the truth is, most traders don't need more indicators. If you go under here on TradingView and you go under indicators, there's probably thousands of indicators. Okay, so it's endless indicators. But what traders need is not more indicators. Traders need more patience, okay? When you start to develop more patience, you're going to allow trades to come to you naturally, and you don't need to rely on too much of these magic indicators. They don't need a new setup. They need better execution of the one you already trust, okay? So some days, your setup, your A+ setup, it does work from time to time with high probability. There's some days it doesn't work, okay? So you just have to accept the fact. If your A+ setup doesn't work today, it doesn't mean that it's not a good setup, or you can't refine it and use it tomorrow or the next day. You don't need to just throw it out the window and look for a new setup or a new indicator or something new to help you out. You just have to, again, exercise patience and just understand that it always doesn't happen. There's days that are better than others. It's just you got to learn how to navigate those days. It's not the next big thing that will help make you profitable. It's getting sharper with the basics you're skipping over. So remember, keep trading simple. Simplify it as much as you can. Stop overcomplicating the trading, and that could set you up for success. So stop looking outward and start looking inward in yourself, in your personal abilities. What are things that you can do? Hopefully you guys are still journaling. Hopefully you guys are still looking at reviewing your winning trades, your losing trades, your break evens, and how to correct those and make things easier. Okay. The breakthrough you're searching for might already be on the screen or in your habits. So refine, don't just replace. If you want to join a winning team, join SST and stop wasting your time. Right now, there's 50% off premium memberships. Okay, so that's available for you guys on YouTube, the free Telegram channel. And on our website, guys, if you do want to join the team, we do have a lot of education with myself and Dave. There's a lot of courses, tutorials, quizzes. There's boot camps that we got going on, and then over 120 webinars that we did over here, and then our SST super systems of trading that we do over here with some homework assignments if you do do them. And then our lifetime coaching sessions. This Sunday morning, we'll have another one, okay? And all of our live sessions, okay, our scheduling is on the website. You can see over here, this is Dave was in the morning, and then now I'm taking over from 12 to 4. Again, tomorrow, Dave will be 8 to 10, and then we'll have same timing tomorrow, 12 to 4 again, into the close of the market. Then we swap, and then we go Friday. We start early, pre-New York, 6 to 10. We'll go right through Wall Street, and then we got a little crash course on fair value gaps for 60 minutes on Friday afternoon, okay? And then there's also the free blogs we have available for everybody. Last one we did was the Golden Zone right over here, and market outlooks for members and trade breakdowns and more blogs available for you guys. Okay, so let's get into the charts, guys. Welcome everybody. Thanks everyone for joining on Zoom. I appreciate all of you guys joining us this afternoon. Welcome, guys. Samuel, thank you for joining. Dale, welcome. Mo, welcome. Thank you for joining. Christoph, welcome. Lorraine, welcome. Samuel. Oh, good. You can hear me. Awesome. Craig, welcome. Thank you, guys. Boom, welcome. Thank you for joining. Amrit, thank you for joining, bro. Welcome. Thank you. I appreciate you popping in and saying hello. Welcome. And Trev and Danny, welcome, guys. And everyone on YouTube, appreciate you guys as well. Robert, good morning. Matt's welcome. Shun Mile, welcome. Awoke. Now, welcome. Jake, welcome. Thanks, guys, for joining. Okay. If you guys don't mind, let's get started. We're going to do gold. Okay. So first thing we're going to do is we're going to look at gold on the daily. So this is how it's moving right now in the 5 minutes. We will break it down, get down to the 5 minutes, but let's do a little top down on the daily and see how everything is moving the last few days and into today. Okay. So first off, let's get the bigger analysis. We all know, if you're on these calls with me every single day, you're going to know probably what I'm going to do here, because nothing has really changed. The all-time high was right here, April 22nd. We hit 3,500, and since then, you see we've been diverging away from that all-time high, making lower highs and lower highs and lower highs and lower highs, and pushing down. But we are ascending from the bottom. We're also making higher low, a higher low, and a higher low. So we're in this kind of symmetrical pattern. Eventually, there's going to be the market is accumulating both ways with buyers and sellers, and they will eventually redistribute it in either direction, whoever accumulates more. And again, if there's catalysts that push moves, like if there's something that is positive for gold, all of these buyers that are accumulating will probably redistribute that volume and maybe, inch towards the all-time high and create a new all-time high. However, things could also sell off. Gold could also sell if everything is stabilizing around the world and money is shifting from gold and going into other securities. There could be some selling and we could see a sell-off. Okay, right now it's still kind of in this consolidation. So from that all-time high, again, we identified this zone right here on these two bars as an area of resistance. And then over time, when you stretch it into the future, you can see it starts to turn into a little bit more supply. When it came in the second time up here, it got closed below, and then it came in there again where it got retested, and then they rejected it back out. So if you stretch this zone again into the future, you can see a third time. It actually closed above there. That was a Friday, but things develop over the weekend. There's weekend news, there is things that develop, and when they opened it up, then the next day it came right back down on Monday, starting the new week, and we've been pushing down since then. So if we stretch this red supply zone into the future, you can see we came really close to hitting it last week, Thursday, July 3. But since then, it's been making lower highs, and we're kind of moving away from this red zone. When we do have a red zone, you can also do the opposite and look for a green zone. The green zone that we've been looking at is right over here that created this bullish flag pattern right there, that 3-day flag. And it was pushing from this really bullish day. The second bullish day closed above the structure, and then we also had a third day push. And then you could start to see where it started to consolidate. Next day was bearish, then it moved bullish. So just identifying that 3-day block in there and getting in the habit of stretching it into the future. You can see when the first rejection off the all-time high, when it came right into that zone, it was respected and we had that nice big bullish push, creating the second top M pattern up there, and then it came right back down into the green zone. It actually, the sellers did break and close it below, and they did push it, ignited bearish all the way down there. So we have our larger range where we've got our all-time high 3,500 and our most recent low that the sellers pushed it down to was 3,120. But you see the response, you see the reaction. It came right back up. It closed really strong. Then we kind of consolidated in here where it was bearish, bullish, bearish, bullish for about 4 days, 5 days, and then you see the buyers accumulated more and started to bring it right back where it traded back into the red zones. So if we stretch this again into the future, you can see on this day, May 29, end of the month, it almost came and transacted in there, but it got a higher low and continued to push up. And stretching this again into the future, you can see that we almost came into it the end of June 30th, but since then we've been building off of it. Now what I'm looking for are points of interest inside this zone where we've got this red box and green zone. You can see all of these multiple daily candles trading in here, going bullish, bearish, bullish, bearish. But sometimes your eye can catch something and you can see where you've got bodies opening, bodies closing, wicks retesting. It was this area that we've been always talking about over here. This 3285 area, and you can see it's just starting right away. When you recognize a big body candle, how it closed above, look at the first natural retest. It retested right there, roughly 50%, and it got a wick and continued push up. Now you can kind of back test this because now the candles have already printed, so you can start to see like footprints that they leave behind. So this day right here, April 23, it came down and broke that yellow line, but look at where the volume closed, right at that yellow line. Next day it opened bullish at that yellow line. You can see when candles closed right at the yellow line, opened at the yellow line. Again, here's a nice big bullish candle representing about 50% of it right there, and you see a retest. Here's a big bearish candle, and then that line is still representing about 50% of it. You see a body close, retesting, support, retesting. Like I'm not going to go over every single one, but that's a good point of interest, 3285. And look at today. Yesterday, like yesterday's low was right there. Today's low is basically right there. So you can still see today how it's still a point of interest all the way back from mid-April. And you can still see how it's holding up, okay? So we've got an point of interest of support. Is there a point of interest of maybe resistance? Just looking for an opposite. Again, and just kind of just look where there is some bodies, and like right around there, you can see when it kind of came up bullish, look at where the body closed right there. It came back up, it opened right here, came up, closed below there. Again, bullish, look at where the high was, right at that yellow line. Look at what the retest was, that yellow line. Look at on this day, the bearish candle closed below, look at what it retested as resistance, the white line. Like here was a bearish candle closed below, look at what it retested, the yellow line. Here was a bullish candle that closes above, look at where the next day, like a bearish candle closed, a bullish candle opened, a bearish candle, like right here. This is a good point of interest. And you see here, retest, wick at that yellow line. Here's a bearish candle closing below. Look at right around half of it. Look at the retest right at that area again. And then I look at the number, 3,349 and 75 cents. So, you can kind of manipulate it yourself and just make it 3,350 right on the dot, like just bring it up just a little bit and make it right there at that nice psychological number. So we've got a point of interest of support below us. We've got a good daily point of interest of resistance above us. Okay. We could even get one more inside here in between these yellow lines. I could go even more in depth and find another point of interest in here. But what we'll do is we'll base everything off of yesterday's bearish candle. So now, when I'm looking at what the daily candles are doing, Monday, June 30th, we started this Monday, Tuesday, Wednesday. Wednesday is kind of midweek, either it's a continuation or possible clue that the market could reverse. And then you see going into Thursday, it pushed down, and on Friday we closed like right here. Again, Friday, volatility over the markets. Look at when we opened Monday. It was just fake out like to the upside, and then it was really bearish to start the week, and then it came right back up on near the close and closed right there. When we opened yesterday, you can see again we came up, but look at the wicks. We are below our point of interest. We are well below 3,350 on the daily, and yesterday we had this big bearish candle come all the way down, and you guys remember we bought basically the bottom, and that's what moved up for us to these levels. So yesterday, we were kind of about the bottom wick. When we look at how low it came to, it almost hit our 32.85, just shy of it, just by a little bit. And then now what we can do is kind of get some points of interest where we closed yesterday and where we opened today. So just basing off of yesterday's close and today's open, right there. I don't see any gap ups, gap downs. It's just a clean close, clean open. And look at the price tag beside it. 3,350 cents on the dot. It doesn't get any more technical and when you're talking with price action than that number. So you can see that like a lot of my points of interest on daily are these psychological numbers. Okay, so let's just now follow the volume. We opened. Was it bearish or was it bullish when we opened? It was bearish. We can see the wick behind us. So it was initially bearish where it came down. The sellers were in control. They took out yesterday's low and they made a new low. So you're going to see a purple line I'm going to place right at today's wick. And it's very, very close to that point of interest that I have. Okay, so there's our low of the day. 3,283, and it's right near that point of interest. If you want, if they're too close together, you're more than welcome to get rid of that yellow line and then just go with today's low because they're very, very, very close. But I'll leave it on my chart, just to show that it was there. We plotted this prior to looking at today's candle. And then we just got to make note that the sellers did push down a new lower low. Okay. So, when you're trending down, are you making lower lows? Are you making tweezer bottoms? Are you making higher lows? So they did in fact push it down, but we still have good volume coming back up over here at the end of June 30th to be exact. So what was the response when we came down? We made the low of the day. The buyers were there and they rejected this big bearish candle coming all the way right back up to the opening price, and they've flipped the candle now. Now we have a bullish pin bar on the daily. Some traders call it a hammer. I don't. I'm very technical. The reason why it's not a hammer is because we have a wick above us. A hammer does not have a wick. A hammer is right at the highest point of the day. So this technically is a bullish pin bar. I can locate where the wick is right there and put a purple line. And that's our high of the day. And you can see we still have 4.5 hours to go on our daily candle. Gold could continue to push right back up into trading into yesterday's bearish volume. So our high of the day currently is 3,313. We're only about 10 pips away from, overtaking that high of the day and continue pushing. So let's say, for example, we do take a new high of the day and we push up. Where are we going to go? Are we going to go all the way right back up to the all-time high? Probably not. So we got to kind of dissect a little bit more with yesterday's volume. First thing, what I do is I look at 50% of yesterday's volume. If you don't want to guess, bring your Fibonacci tool from the opening and the closing of yesterday's price. Right there, that white line is 50% of yesterday's bearish volume, and it's 3,318 and 83 cents. So I'm placing a yellow line right exactly at 50% of yesterday's volume. So it's right there. If I want to kind of get a zone of yesterday's bearish volume, what I can do is I can get my 50% right there, and then I can go one line above, one ratio above, 618 in this situation, and go one ratio below the the 0.5, and then I get the 382. So right there, that is representing that bearish block, that bearish point of control of yesterday's volume. I highlight it by making it red, and I also stretch it into the future just in case we're going to trade into it today, tomorrow, or next week. I want to highlight that. And from there, I get rid of my Fibonacci, and I can see. So if we create a new high of the day and this candle turns bullish hammer, we're trading right into that point of control. 50% is exactly right there. This is the lower point. This is the higher point. If we do continue to move like out of this and it's continuing to push up, maybe what we got to do is look at our next point of interest right here, where yesterday opened and Monday closed. So you do have some points of interest on bodies of candles right there. So that could be another point of interest, 3,337. If you would continue to go, there's our next point of interest, 3,350. Again, we can continue to go up as we move up, just like we did yesterday with that 5-minute buy. We were just taking it bar by bar to see if we would continue to make highs, have a trailing stop loss running, and secure profits along the way. Okay, very similar. If this was like a 5-minute candle coming up, you're proceeding like a very bearish 5-minute candle, and now you're coming right back up. You could come in here and sellers could exhaust this down and continue pushing it down. Okay, it's just on a higher time frame. It's a daily. Now, when we look at the overall like pattern, what's going on, we had this trend coming down where it was making lower lows and lower highs and lower lows and lower highs and lower low, and then they started to bring it right back up when we came close to this demand area. So that is technically a higher low from all of this. So the buyers are protecting like this big rally to the all-time high, and then gold came up for those 3 days, and you can see a lower high right here Thursday, bearish engulfing candle, come back down. The buyers were trying, but the more offers in the market push it down, and then we got that big bearish candle yesterday. We're coming right back up today, but that's that point of control where we might have that fight in the middle there between the buyers and sellers. Okay, if you ask me, today's candle currently is very bullish. It's a bullish pin bar hammer candle coming right back up, and it reversed today's bearish move already. Okay, now what we can do is break it down from the daily. You can either go to a 4-hour if you like and dissect 4-hour. I personally go into the 1-hour. And then I look at significant hourly candles. I look at significant times in the market. For example, London, 3 a.m. I look at 9 a.m. when there's COMEX market and Wall Street. I look at 8 p.m. when the futures market opens up. Like you'll start to see some patterns developing. So if we start just with this bearish light coming down Tuesday, again, when was it? 9 a.m. Wall Street continues to push down 10 a.m. Made the low right there at 11, and we were coming back up. If you do remember, this was what we bought yesterday, 11.15 to be exact, and I ended the call at 1, but you can see how high it went. It traded basically into 50% of that big hourly candle. If you identify where half of it is, right there. So that's a good point of interest on the hourly. You remember how I showed you how to identify these yellow points of interest on the daily? We can do the same thing with the hourly. The beautiful thing about price action is all candlesticks have the same characteristics. So if I didn't tell you we were on the hour, if I didn't tell you we were on the daily, if I told you that these were 5-minute candles, you guys would have absolutely no idea. You wouldn't know because they all have the same characteristics. So that big body bearish candle at yesterday at 10 a.m., can we identify where about half of it is? Sometimes when you got bodies already printed, you can kind of go with where the bodies are. So the only thing I do on the hourly is I change the color. I use a white line for hourly. So just to recap, you'll see two purple lines on my charts. One is representing the low of the day, and the other purple line is representing the high of the day. You will see yellow lines on my charts, and those are daily points of interest. You'll see white lines on my chart, and those represent hourly points of interest. So you see what I just did there? I just came right up here, 1 p.m. Remember we ended the call here yesterday? We pushed impulsively up to 3,310. That was that 185 pip runner that I was telling you guys. And then it got push down, and look at where it closed right there. And then look at how the next body opened, retested, pushed down. Again, look at this point of interest coming up at futures market, 8 p.m., 9 p.m. They rejected it back down. Look at how this white line is now cutting through the 10 a.m. bullish candle, and look at the retest right now. So that's to show you how these lines are static and volume can just close above it or below it, and you can utilize this point of interest as a support or resistance line. Let's just do something like just kind of back test really quickly. So you see where I placed the line? I just placed it right at that body where it closed and that one where it opened. Here's the big preceding bearish candle. So let's just try again. Grab the Fibonacci tool, go from that opening price and pull it down to where it closed right there. And see how the 0.5 was right there. The 50% of that entire bearish volume is exactly at 3,305 and 75 cents. I placed the white line right there at those bodies, and it was 3,306. So it wasn't exactly 50%. It was pretty close. But remember, there's a zone. There's the Fibonacci above 618 and the 382. So if we identify a zone and not just exactly 50%, you can see you're giving yourself a little bit of breathing room. And there's the actual zone of that hourly candle. Now we stretch this into the future. Now it gives a little bit more context. It's not just trading exactly right at 50%. It was pretty close. So you can see that that hourly candle impulsively broke above there, closed in the zone, red zone. Again, 2 p.m. after the call, it opened up bullish, lower high. Sellers pushed it and broke it back down. Volume closed in that bear zone. Next hour, 3 p.m., the sellers closed below the zone. Then they pushed it down. But you see where it held support at that daily point of interest. The volume stayed above. There was some breaks. And then look at how it came right back up at futures market in that zone and at 9 p.m. So that's kind of like a double top. Like, do you see the two tops? It came up one top. There's the neckline. The support came up 2 times. There's the double top. There's the M. And there's the impulse break at 10 p.m. all the way down. Okay. And now we're going to stretch this red zone into the future and see how it's trading right now. So I'm stretching it into the future. Now there's a different story right now. You see here at 10 a.m. this morning, the bullish hourly candle closed above this zone. First body to close above this zone since yesterday. We had a couple of impulse breaks, but we got now confirmation of volume closing above. Now what do? I don't change the size of the zone. I change the color. It's a static zone with volume above. Now it could be a support zone. So you see now how I stretch it into the future. And then when I'm looking today at 11 a.m., look at how it created the high of the day. It came right into, look at 50% exactly, right into there. And who was waiting there? The buyers were waiting there. They brought it right back up, but it still closed with a bearish head. And then look at how we opened right now at noon when we just started this call. It just opened, came down in the top of the green box, higher low from the previous. We're still got this big bullish candle, and now we're pushing up. This could be a 3-bar bullish flag pattern, continuing to create a new high of the day and start driving into our bigger red zone above us. Okay, when we've got that, you can get rid of your Fibonacci tool, and we can continue to make some zones down here. So I can see at the low of the day, I can see a wick right there, it came down. If I want to make another hourly zone right there, I can utilize the yellow and the purple lines to show me that there's a good bullish zone if it ever comes back down there. But right now we've inverted this block, and now we could be pushing for more upside momentum. Trend line, if you want to draw a trend line, you can see that the trend line was broken. Okay, so if we draw this trend, like keeping it consistent with the bodies, I could go a little higher to the wick, but I want to keep it kind of consistent with that high. It came down to those bodies. Looks like an impulse break, continued push down. It came back up almost to that trend push down. But look right now. Now we've got the first bullish candle that broke that hourly downtrend, and now we're kind of consolidating. Maybe creating a bullish flag to continue to drive up, but we're coming into a larger red zone above us. Okay, we'll see if the sellers push it back down and take it right through there and close it like right there. Then when we're coming back up, remember, then we just flip this at green zone to red, and it might be again supply in the market, and then you might see it pushing back down to here. Okay, so that's how you can know to stay bullish with a trend, or go bearish or continue. Okay, so right now we got some hourly consolidation where you can see how the bodies of the volume for the last few hours have been trading. This is where you can extend it if you want to the high of the day and bring it right down there. Okay, so like that's to show you the overall flag that we have right now is in this zone. So we're trading from, let's say, for example, 3,308 all the way up to 3,313. 13 minus 8 is $5. That's a 50 pip zone. Okay, going up 50 pips, coming down 50 pips. Okay, that's the flag right now. And we are above the support zone. So we have a high probability of continuing to move to the upside unless sellers keep pushing this down. Okay, so now let's go into the 5 minutes. This is where things get interesting now. Okay. Now you can see 5 minutes, they're a little bit different than daily and hourly candles, meaning that you see more of them, but the characteristics are all the same, right? Okay, so this is what we got going on. You can see how many times we traded into the zone down here, push back up, came down in here, again held support, push back up, came deeper down in here, we kind of created double bottom and came right back up. You can see where we have a lot of resistance on the 5 minutes, and then it came again deep in here at 8 a.m. And then we started to pull out of here during Wall Street and created this bullish move on gold. So that was kind of that hourly trend right there where we broke. I can see just after 10 a.m. Eastern, we closed above it, retested it, and continued to push up. That's where we got to our high of the day right now, when we just started just prior to starting the call, 11 a.m., came back down. You can see right there, that big bearish candle. Look at where it came into, right to our white line. That's that hourly 50% line, came back up. So we're pushing, again, right back up there, and now sellers are bringing it back down. This is that hourly consolidated flag that I have. Again, if we're trading on these 5 minutes, we can look for structure on these too. Right over here, there's a little bit of structure right here, I would say, right? So look at where I'm placing a line, and I'm going to explain it. The reason why I placed the line right here is, look, you had this spin top candle that impulsively broke out, came back. Look at where it closed. Closed right at the red line. Look at the next spin top, virtually right at the red line. Look at the next one, closed right there. This one closed above, right? And then look at what it used for the first support, the red line. Then we had a big bearish candle come back down. And then when it's bearish, it's utilizing the red line as resistance right there and right there. Now we closed above it. Now it's using the red line as support currently. Support right now. So 3,310 on the 5 minutes is showing us a little bit of support right now. So we could continue to drive up. There's a little bit of a trend moving up right now on the 5 minutes, starting from right here, right there, right there. If we connect the dots and we just continue to put our trend line into the future, you can see what type of channel we're in right now. It's in this bullish channel right here. So we're going to see if we can continue to drive with this channel and make our way into this big red supply zone and create maybe a new high of the day. Okay, so you don't want to kind of sell unless you get confirmation that we close below here, and then maybe we're retesting this red line as resistance, and then we're dropping back down to test this low and maybe create a new lower low. Okay, but we got to understand, when you're selling into here, you're selling into a green area where there could be a lot of buyers, and then they could bring it right back up. If we close below this big green zone, go through the motions, we're going to flip it red, and maybe it's going to be holding there. Maybe we flag down there, and then we take out 3,300, that point of interest on daily, and then it drops down further, and sellers are in control, and they're absorbing today's daily hammer candle. Okay, but right now, still bullish. You can see where we do have some 5 minute resistance right now, right there. Bring it down to the bodies. Make a little red zone. I know it's a lot of zones, guys, but some of you guys understand what I do, and you guys get it. I'm showing you how that candle came in right there at 10:35 and got rejected. I'm showing you right now at 10:55 and 11 how we traded in there. They rejected back down. How about if we bring that zone again into the future? I'm showing you right now how we just traded in there at 12:35, 12:40, and we're testing it again. So this is, what I'm showing you is it's a little red zone below a big red zone. So it's like lowering the offers. However, if we can get buyers close it above here, we could momentarily flip this little red zone green, build off of it, and we're continuing to drive. So I'm not in a trade on gold right now, so I'm just continuing to wait it out right now for maybe possible pullback on a buy, or maybe confirmation of a candle bar closing above here. There could be a fake out, keep in mind there could be a fake out up here. It could definitely close above here, maybe kind of do something like this and then come back down and then I could sell that leg coming down if there's like a fake out move up there. But let's analyze it together. This is what we got. I'm going to add the daily bar indicator right beside us so we know. Look at how it's a big daily hammer candle, bullish pin bar hammer candle technically. But notice how it opened. It was very bearish today. We came into this green zone. That's where we caught our low of the day, and buyers were there, and they flipped the open, and look at all the bullish volume continuing. So very bullish on the daily right now. And so I'm on the 5 minutes. We can add some moving averages. If we want moving averages, I'll get rid of that trend line. Things that are unnecessary right now, I'll kind of get rid of, to make it a little bit more clear. It's pretty clean in my opinion, but we can add some indicators now, like a 9 EMA. I know some of you guys use your 9 EMA, so we're technically still above the 9 EMA. The 200 EMA is well below us. It's basically at our opening price, where we opened at 3,300 today. Okay. So for example, if we do get if the sellers sell it all the way down to like the opening price down there, you're breaking that demand. There's probably a lot of liquidity down there. You're hitting that daily point of interest, 3,300, nice psychological number. You're also hitting that 200 EMA. That might be a possible great buying opportunity to buy it back up. You're buying on discount on a very bullish day. I'm sure that the buyers are protecting the open on today's bullish candle. That could be an opportunity. So what I do at 3,300 is I set an alert there. I just right click it, set an alert, and maybe I don't get it on today's session. Maybe I get it in the futures market. Maybe I get it in London. Maybe I get it tomorrow morning. But regardless, I want to be alerted if it ever does come back down there, because it could set up for a good possible buying opportunity. Okay, there's other buying opportunities above us as well. We could look for right here. But let's just wait it out. Let's see. So what happened with that candle, that 5 minute candle? You see, it was really bullish, really bullish. It impulsively broke. It did create a new high of the day. Okay, so that's the newest high of the day. And what happened? There was a rejection, and they closed it again below. Now we're opening again with a bullish ignited bar. So you see the buyers are still there. They're opening strong. So now what they got to do is continue to backfill that wick and try and create a new high of the day, which they quite possibly could do. But you and I got to watch for clues too. If it's a tweezer top high, if it's a lower high, and they're pushing it down. Okay, so that's what I'm watching right now. This could, represent a double top as well. Like you have the first top right there at 11 a.m. Our bigger neckline is right around here. It's coming right back up. Okay, so right there, that's technically a second top. So we'll see, are the sellers going to push it down, maybe close below here and get a push down, or are buyers going to continue to ask to trade at the high of the day and squeeze these short sellers and continue to drive it up? Okay, so you see how that bar opened very ignited, pushed up, but it didn't create a new high. It's a lower high, and now the sellers are pushing down. It's an inverted hammer candle now, but we'll watch again. It's still real early. You still have 3.5 minutes to go, so anything can happen. But just pay attention that was an ignited open, so it's still holding. In the news right now, so on the left side, guys, we got Financial Juice live over here. At 11:39, Trump, 20% tariff on the Philippines starting August 1st. 25% tariff on Brunei starting August 1st. Trump to impose 30% tariff on goods from Algeria. Moldova goods gets 25% tariff. 30% tariff on Iraq. 30% tariff on Libya. It's like what's her name? Oprah. You get a tariff, you get a tariff, you get a tariff, you get a tariff. We all get tariffs. So it looks like everyone around the world is getting tariffs. 25, 30%, 40%, you name it. Just whatever, okay? So everyone is getting tariffs here. So that's in the news. So it's August 1st. So this date's been pushed multiple times. Started, I believe, April 9th. He gave that 90-day, 90 nation deadline. When July 9 came, he kind of extended it now to August 1st. So we'll see. When August 1st comes, we'll see what happens. Is it going to be firm on this, or is it going to change it to September 1st? We'll see what's happening. But right now in 10 minutes, we got the 10-year bond auction. So Fed bids for 10-year notes total 4.6 billion. Trump, again, 30% tariff on Sri Lanka. So Sri Lanka, you get a tariff too. Everybody gets a tariff. If you haven't got a tariff yet, don't worry. You're going to get one very, very soon. It's how it's going, guys. It's how it's going with this. Thanks, guys, everyone on YouTube. 130 viewers. If you guys can hit the like button, we do appreciate it. Hit the subscribe button, notifications. We do appreciate you guys. Okay, thank you, guys. Do you mind if we stick with gold for maybe another 10-15 minutes? We can watch how it closes at the daily high going into 1 p.m. and then the Fed Treasury notes, the bond auction with the 10-year. We'll see how that is. And then around just after 1, we'll move over. We'll look at NASDAQ and US 30, okay? So let's just keep an eye on this, okay? So remember what I said. We're at the highest point of the day. It is a really bullish candle, okay? We got a lot of bullish volume. We got the 10-year bond auction coming up in 6 minutes. And we have a new 1 p.m. candle coming in. And the 5 minutes are like at a second top, okay? So keep all of that in your head, and let's see what happens, okay? And remember, there could be a fake out with the 10-year bond auction, okay? It could push for a new daily high, and maybe they bring it down. Or it could close above there, and we're continuing to drive. So let's just, I'm not in a trade right now. I'm not looking to get into a trade right before 1 p.m. I'm not looking to get in a trade right before the bond auction. So I'm holding off. And I also don't feel comfortable buying the highest point of the day. If I want to buy, I want to buy a pullback. I'd like to buy a pullback here at this red line. It would be a fantastic pullback if I can get down here, so we can just wait it out and see what happens. And then we'll move over to the indices in just a moment. Okay, so just keep an eye on that. Remember that candle opened, ignited, it pushed. It didn't make a new daily high. It closed, bullish volume. Look at now how they're opening 1255, a bearish engulfing candle coming down. Engulfing, I say, because it's engulfing the current volume. It's not engulfed yet until the bar closes. So right now it is engulfing the previous bar's volume, but caught a wick, might come back up, might flip for a new high, but technically we got to watch. Lower high, lower high, lower high. If it closes bearish below here, we could push a little further down. Okay, so it's interesting, guys. It's interesting. Countries should start an exclusive tariff club. Yeah, the exclusive tariff club. You never know. The prestigious tariff club. We joke about it, but we have to pay attention to it because it does affect the U.S. dollar, and it's very volatile. The markets do not like uncertainty, and when you keep threatening tariffs, the market does not like that. And it makes for a choppy trading environment, which is difficult for you and I. So as much as I joke around about this, but it's not good for you and I as traders, okay? Because the markets can be directly impacted by this, create a lot of volatility, uncertainty. It's hard to trade. Maybe the market's not trending, could be choppy, and you and I can make a lot of mistakes when we're trading in that type of environment, okay? But the best practice is just use proper risk management. That's all you can do. Whether the markets are trending, or they're choppy, or they're very difficult to trade, just trade with proper risk management. That's it. There's not much more we can do. Okay, so look now. They're pushing it down. The second top, when they broke for a new high of the day, we got the 10-year bond auction coming up in about 4 or 5 minutes. And look at what they're doing. So let's watch. Is this bearish bar going to take out any of these lows? Is it going to close engulfed below these? Will it come back up to retest this red zone? Okay, so all of these things. And remember what I was saying. This could represent the second top of this 5-minute pattern right up here. But I could just be misspoken. You know, as it's coming down, we could have buyers bringing it right back up, and who knows, maybe it closes bullish again and they flip this candle and then we're driving. Okay, let's let the candle close in the next 2 minutes to determine exactly where and how it will close. But looking at it right now, the sellers are in full control of this candle. They opened, they didn't allow the buyers to even attempt to create a new daily high. They came all the way down to here. But it is, again, we're trading into this bullish candle right here at 1245. It's got a higher low and coming right back up. So it's still got this big bearish body, but we'll see where it will close. Will it close below this red zone? Will it close in the red zone? Will it close above the red zone? Will it come back down near the end and engulf majority of this candle? Again, you know, where's 50% of that candle? Right there. That's where like my cursor is. I'm paying attention to that area right there. Let me know if you guys have any questions going into the bond auction. So right over here, Forex Factory, you'll probably see the countdown right there. 10-year bond auction in 2 minutes will be released. It's just after 1 p.m. So you see 101. Sometimes it's a little delayed, but that's what we're looking at, okay? Look at now, the selling pressure is coming all the way right back down to reclaim maybe its low and create a new low, okay? Point of interest is that body and that body right there, okay? So we're continuing to watch this. "30 seconds to go into the close. Always pay attention to the last 30 seconds. And also, this was that parallel channel we were in, okay? So we've kind of just tapped into that parallel channel, found some support, coming back up. It's closing right now. So we did close below the red zone. It's coming up bullish right now. Remember, they haven't released the numbers yet, okay? We still have 50 seconds to go before they release the bond auction. But coming up, they rejected it, pushing it back down. Let's see what we got going on here. So the second top is intact at the highest point of the day, but now we got the 10-year bond auction coming up in just a few seconds here. So you might see like a volatile candle, okay? I'm just telling you, if you are in a buy or sell right now, there could be a little bit of volatility when they release this bond. It might be a dud for all I know, but just be prepared. Okay, so 10 seconds. Okay, so pending. That's what I said. Could just take a moment before they release it. But I'm also looking to see if the buyers retest this and then they drop it. I might look for a selling opportunity if it presents itself. Okay, so I see tweezer bottom lows coming back up, still bearish, still pending. Have they released it? No, not yet. So we'll see if it's lower than their projection or higher than their projection. 10-year bond. Okay, the suspense is killing me. So remember the number, 4.42. Okay, there it is. 10-year. Yeah. Okay, just 1 second. Guys, I got to get the door. There's someone at the door. I'm sorry, my kids are just calling me. 1 second, I'll be right back. Hey guys, sorry. It was Powell was at the door. Just let me know what's going on with these interest rates. No, I'm just joking. It was just, oh man, I missed that. Okay, let's see right here. Is this candle close yet? 90 more seconds to go. Okay, the numbers came out. I apologize, guys, but my kids were calling me because someone rang the doorbell here. So 4.36. So 10-year bond auction lower than the previous. Okay, so let's see how that impacts the U.S. dollar in the next few minutes. Okay, so it's still pushing down bearish. Okay, so respected the double top on the 5 minutes, respected the high of the day. We're pushing down, but this thing could easily come right back up. We haven't retested the red zone yet. Okay, so again, just stretch that into the future. And we'll just watch right here. Is anyone in a buy or sell currently right now? Man, it was set up for a nice sell. Shit. Why did that person have to come to the door right at that time? If someone set me up and brought someone to the door right when they released that, you guys are in big trouble. Okay, so this is closing in 5 seconds. Look at it. It's pushing down below that point of interest. I'll just kind of move my cut line to 50% real quickly. You know, like look at how it opened bullish ignited. So let's see if it retests 50%. Your 9 EMA, we're below the trend line. This could maybe continue to the downside, but let's just see the buyers if they come back up. Okay, so they're pushing it right back up. Look. Okay, so we got above that 50%, or maybe the 9 EMA. How high will it come? Will it come all the way and retest the red zone? Okay, so that's a quick bullish ignited candle coming right back up. Okay, so this is getting interesting now. Will it engulf this big bearish bar? Will it close above this point of interest? Will the next bar be bullish coming trading into the red zone? Okay, so if you're not in a trade, it's all good. You know, don't panic right now. We'll continue to watch this. I'm just taking a peek at my spreads. Just make sure everything is good. I've got a 0.8 spread right now. I don't know about you guys, but if I'm taking any trades on gold, I got a 0.8, less than 1 pip, which is a pretty good spread. Not the greatest, but pretty good. Okay, so you see where I found a little bit of support? See this bar right here, 1210? If we're looking like kind of 50% of that, like right in there, that little zone right there. Okay, so we found a little bit of support in that body, still holding. Okay, you see what I just did there? 50% of that body coming across, sold right in there. We got a nice big bullish ignited candle printing out of there. Okay, so it's still upholding this uptrend. That could be just like a minor fake breakout coming back in. We'll see if the volume can continue to come in this upward parallel channel, and maybe gold will continue to push near the high of the day and actually break out for a new high of the day. But let's see how the volume will close in the next 2.5 minutes, because we still have half of this candle still to go. Yes, guys, we still have the FOMC meeting minutes, the summary coming up at 2 p.m. That could create some volatility as well, okay? Again, remember, that was a bullish ignited candle that opened at 105, coming all the way back up. It got to the point of interest where our recent body opened, the bearish bar. Okay, so we're going to see if we can come back up. Relative, are we going to engulf this? So big bullish bar coming right back up. So that could have just been kind of like a fake out to the downside, coming right back up. But again, we still haven't retested this red zone yet. So that's what I'm looking to see if we can retest this and what's going to be the reaction up there if it gets up there. Okay. So the U.S. Treasury auction results are out right here. If you kind of want to read a little bit about it, should be some articles coming up very, very soon. Okay, so let's watch the close of this. We've got a bullish engulfing candle so far. Will it close engulfed? Will this momentum continue into the next candle and continue to drive for a new daily high? Or are we going to be retesting this red zone up here? Okay, we're still kind of in a range of some consolidation, just bigger volume now due to the news. Big bar coming right back up. Look at the daily candle attempting. Again, that's the highest point of the day. Okay. Let's see where this thing will close. So I don't know if that was kind of like a fake out to the sell side and coming right back up. And then locating 50% of that big bullish bar, I'm going to say it's keep moving. It's like right around there. That should be about 50%. Look at where it closed with no wick right at the high. Okay, so they opened it bearish, pushing it down. If this just kind of flips, it could be a new daily high. Like this, you could look for an impulse buy out of here if you still want to go with the upside momentum. However, if you're patiently going to wait, maybe you'll get something like right around here in 50% of that bar. If you're patiently waiting for a pullback, or you're itching to take like the impulse break for a new daily high, which could definitely continue to drive out of there. But just notice that it opened bearish and coming down. So it's still in that red zone. So you got to ask yourself, am I taking an impulse buy, or am I going to wait for kind of maybe a pullback down into here? Or every time I see it coming down, it's going back up, coming down, going back up. So it is building. It could be an impulse break. There is those times where intuition, you might want to take it the way how it's building. Okay, so that is a new kind of high of the day. So it did break. Let's see, it's coming back down. So maybe the next push back up might be an opportunity to buy it. I'm going to go in. Okay, so I'm going in because it came back down and then going back up. So I'm in a buy, new high of the day. I want to drive with this bullish candle, and I want to kind of get momentum off of this big one that came in. My stop loss, I'll place it like right below this zone down in here. Okay, so I'm in a buy on gold. If it can get up to the bottom of that red line, that's 15 pips. I'd like to target maybe 25, right up to there. I can look backwards to see last time we were trading in here, right over here. Last time we were trading there was kind of wicks right there, 3,317, maybe somewhere like right around here in between those two wicks. I'd like to see if we can drive up to there maybe today. Okay, so you see that one, that's where I just placed that new line, that one relatively above us. So if this body can close above, again, I'm going to flip this red zone green. Maybe we develop some support off of here. But this is a pretty good move so far. Okay, if you're just looking for 10 pip scalp with zero drawdown, you can be looking for that. You got it, but I'm kind of looking for 25 and maybe continuation to build off of this. Okay, and we got about half the candle is exhausted, so we got about 2.5 more minutes to go. Okay, it could definitely get pushed down. Okay, but that's why I'm relying, if it gets pushed down, maybe to hold 50% of that candle, and then my stop loss is below there. I know it's a rather large stop loss, but I'm just putting it below structure. Eventually, I'm going to start to reduce my stop loss if it can start to move up here and here. Hopefully, I can get it to a break even soon. If it taps into 25 pips. And then also, if this bar can close above here, I'm going to flip this entire red zone green, because any pullbacks might be a support level there. And we're still trading in this parallel channel That could have been that 10-year bond auction was kind of just like a little correction, but the buyers were there and they bought it right back up. So I want to buy with that continuation off of that. Okay, we got 90 seconds to go into the close. Okay, so that's roughly 10, 11, 12, 13 pips. Up to there's 15 to that red line. Again, I'm looking for 25 at least to start reducing my risk. Nice daily candle pushing again at the highest point. If this candle was to close like this, I would just bring my cut line, identify where 50% of this volume is. In case we pull back, I want to see if we can hold 50%. More than likely, it will come back to retest this red zone unless we can build off of this. So I don't want to go to a break even just yet. Okay. Okay, so we got 20 seconds now to go into the close. So we got to watch the close now. Okay, who will have momentum going into the close? And where exactly will it close? I'm going to assume it's going to close up there. So I'm just going to go ahead and make my red zone green. Okay. Okay, so you see how I changed that entire red zone green. 50% of that candle is like right around there. Okay, so we got a little bit of a wick. It's opening bearish. If we do come down, excuse me, I'd like to see if we can retest 50%. If not, it will pull back to where I entered. So that's why I don't want to go to a break even just yet. Unless I can get it kind of breaking through here at like 20, 25 pips, then I'm going to start to reduce my stop loss. I could definitely go right now underneath this block. That's what I'm going to do. To reduce it just a little bit, I'm going below this block. So I just reduced my stop loss significantly from under there. So it's right there. Hopefully, if we can move up 25 pips, I'm going to take my stop loss and go to a break even and then start to maybe scale out a little bit in that bigger red zone if we do eventually get up there. Okay, so now big bearish candle coming down. That's that 50% I'm looking for to grab a wick. It's not there. So it could come all the way back down and retest this green zone. Okay, remember, we haven't retested it yet. This is our first candle that's closed above it and created the new high of the day. So we'll see after it comes down, maybe retest here. Maybe we're getting some buyers accumulating in this depth of market over here that want to get back in and buy gold. We'll see. Okay, so it's right back to where I entered. Okay, so just went up 10, 13 pips, came right back down to where I entered. Now we'll see the actual retest. Okay, so you see it's coming a little bit deeper into the green zone. Got an initial wick already, higher low, but still majority of big bearish volume. So they could easily come back down to take their low just right there and coming deeper down inside here. So first thing I would look at is about 50% of this green zone right there. Okay, exactly. And then we got equal lows now. Okay, so will those hold up on this big bearish engulfing candle? We'll see. But those are like equal lows. Will it continue to hold? Okay, so they didn't hold. So they're creating a new lower low. There is still green zone. Okay, remember I didn't change the size of the zone, so it's just coming a little bit deeper down in there. Your 9 EMA is right there, that green line. And then if it can't hold this zone, then 50% of that big bullish candle that came up right after the Treasury 10-year bond notes, that's 50%. And then my stop loss is just below it. So if it comes all the way, cuts through this green zone and that green zone, that's it. I'm out of the trade. I don't want it to start coming all the way down and then breaking and then it's really bearish. So that's my maximum risk. I reduced it from down there to below there. We got a good wick coming out of the zone now, but again, it's how the bar will close. Okay, we still have Lots of time left on it. 1 minute, 44 seconds. So we'll determine where it will close. But you can see it came in here, got rejected back out, coming in. Remember, I told you it's how the bar closes. So sellers are still strong, bringing it back down. We'll see. It's going to probably be a tug of war going into the close. So that move wasn't enough for me to take profit out of that trade. It was only 14 pips. Okay, I didn't do anything, so maybe the market is punishing me now. Okay, so just guys, my stop loss is right there, 3,311. If it's not holding that zone, if it cannot hold, grab a wick in that pocket of that big body candle, then that's it for me. I'll exit that trade, take the L, and move on. I'll verbally let you know as soon as I get stopped out, if I do. And then I'm watching the last 20 seconds to go into the close. Will it close in the green zone, below the green zone? Is it going to come deeper down into here? And here's the close of it. Okay, so it closed right at the zone. I'm going to assume that it's red. I'm going to just change the color. So I don't have much. If the buyers bring in here and they get rejected, definitely going to trade in here, and then that's my stop loss. So I'm going to need a big bullish candle coming back up, trading about 50% of that bearish candle, and then get back where I bought in, and maybe work this area above this red zone. Maybe get back up here, consolidate up here, and then start that next leg up. But again, buyers are buying into a red zone right now. So again, we're going to play it out, see what happens here. Omar, am I reading your comment? Yeah, but you're asking about, so I went for a buy for FOMC. This is not FOMC. FOMC, the summary is at 2 p.m. This was a 10-year bond auction. That's why I didn't answer your question, because it's got nothing to do with what we're trading right now. Okay, so that was a big, nice bullish candle came in. They rejected it back down, pushing down. Okay, so they could definitely take this and trade into here. If the buyers are not here, I'm out of that trade. I take my L and I move on. There's no point in continuing to hold it. Unless you want to keep your stop down there and at the bottom of this trend, you're welcome to. I'm not. Okay, so now it's trading right in that box. That's where I want to see a wick, and that's where I want to see the buyers hold this. If they're not here, they're not going to be here. Okay, so they're there momentarily, but again, there's still 3 minutes left on the candle. Okay, so just because they're there momentarily doesn't mean that that's it. It's going to start to go bullish. Like, they're pushing it up, but we're still got selling pressure. We're still below this red zone, so sellers can definitely come back down in here and absorb those buyers. Now we're coming back down. So are the buyers going to be again there to push it back up, or they're going to lose this, and then I'm getting stopped out? So the second attempt, they're initially there again. Okay, guys on YouTube, I got to make this clear because you guys are not listening. We do not have FOMC right now. Please talk about FOMC. FOMC meeting minutes. It's not the FOMC meeting with Powell. It's just summary of the notes. That's at 2 p.m. That's still 37 minutes away. Okay. I'll talk about it. We've got an article. I'll read you about it. Just 1 second. Let me just manage this trade because I'm about to get stopped out. Mo, what I mean by it's not nothing, it's not the regular FOMC where there's a federal funds rate pause, increase or decrease, and 2:30 where Powell speaks. Do you guys understand the difference between that? Today is a summary of last month's FOMC. Okay, I don't know how to make this any more clear to you guys. Okay, so we got a bear spin top right below the red zone. We've got those buyers coming in 2-3 times in here, but they flipped the candle where it was a little bit blue, but sellers can continue to come down. Sometimes I just want to get stopped out and just move on. NVIDIA in the news. NVIDIA plans to launch a new artificial intelligence chip designed specifically for China as soon as September. As soon as I get stopped out of this trade, I will read you guys exactly what is the FOMC summary, okay? Just so everyone is on the same page here. Will it affect gold? It will affect every single security. Yes, it affects the US dollar, will affect every single security that you're trading. Ron, I promised you guys Bitcoin last week. Yes, I did promise you guys Bitcoin in the Asian sessions, in the Tokyo later sessions, when I do those. Yes, we're not going to look at Bitcoin right now during Wall Street. Okay, so far, the buyers are holding that point of control, that little gap right there, and that big bullish candle right after the news. Okay, I'm in drawdown holding this. I'd like to see maybe the buyers come through this red zone and again close it above so that I can flip the red zone back to green and build off of this. However, when they are coming up, they're getting rejected with lower highs. So if they're not there in the next few minutes, they will definitely come and maybe cut through this green box and then take me out. My stop loss, like I said, is just right below that box. Okay, you see that? That's like disappointing where it came all the way up, and it's a lower high from the previous bar. We're still below 50% of that big bearish engulfing bar that came down. The buyers are there, they're trying, But again, they need to make a new higher high just to, change the algorithm, to change the depth of market just a little bit. Because every time they come up there and they get rejected with lower high, you're going to get more offers piling in the market. Then you're going to probably get buyers pull their bids from down here and maybe place them down in here or down in here to get a better discount buy if the sellers are pushing it down. So I kind of want to see a new higher high so that more more pending orders will come in here on buy side in this green box. Just prior to me getting taken out here. Yeah, so yeah, they're spin top indecision. Sellers are still there controlling this candle, pushing it down. It's going to close in 50 seconds. So it's an indecision candle, could be curling up, but when you don't create a new higher high, it just gives time for sellers to continue to come in and offer and push the market down. And then we got the last 30 seconds to go into the close. 15 seconds. How will this bar close? If you don't get a new higher high, okay, then what you need is to close with bullish volume to kind of engulf the previous bearish volume. Okay, that's if you don't get one option, you got to kind of get a second option. So it did technically engulf that previous bearish bar. It didn't create a new higher high, okay, but maybe we can build off of this bullish volume, okay? So technically, we're still, above this zone. We're above the 9 EMA, but we're transacting now in that red zone, which was that rejection right there kind of created that second top where it pushed down right when we had the 10-year bond auction, and then it came right back up. I bought that candle. It was up 14, 15 pips, didn't do anything, and the next bar came all the way bearish down, right into that zone where we identified, and now it's coming right back up. It did create a new high from this candle, but ultimately, can we get blue volume closing back above there? The reason why is because I want to create the red zone back to green, build off of it, and see if we can attempt, again, at today's daily high of gold, and maybe continue to push. However, if we don't, these are all lower highs, and selling pressures continue to push it down. Okay, so that's a big shooting star. We got rejected, pushing down. That could be the bar that takes me out right there. That's a sharp rejection and a big bearish shooting star coming down. As soon as they take out that low, they'll create a new low, and then that's where I'm getting stopped out. And then I got to regroup and look for another setup. Okay, YouTube, you guys are not focused. You guys are not focused today. You guys are, what predictions for BTC? We are not on a BTC chart. What predictions do you want me to give you? I'll tell you. Buy. There's your prediction. Buy as much, accumulate as much Bitcoin as you can. There you go. Holy. I get a lot of headaches on YouTube. Okay, I'm stopped out of that trade. That's it. Thank God. Oh, I was hoping to get stopped out of that. Okay. Now, to answer your questions, what is FO? Let's go over here. Okay. So I got stopped out. Okay. I lost on that trade. Going over here on Discord real quick. Let's just go over here so you guys can read a little bit, educate yourselves. Okay. So what are FOMC meeting minutes? Okay. So if we go to Forex Factory right here, FOMC meeting minutes. Okay. Normally we'll have, when it's the FOMC meeting, the actual meeting, you will see a federal funds rate, 4.5%. You'll see a forecast. Are they increasing, decreasing, or pausing? And then at 2:30, you see there's no 2:30 here. 2:30, you will see Fed Chair Powell speaks, a conference, okay? So this is a summary of the last FOMC meeting. Okay, so stop asking me what are the interest rates, are they going up or down? It has nothing to do with this. Let's just read real quickly what this is here. The FOMC meeting minutes are detailed notes released by the Federal Reserve about 3 weeks after their official interest rate meeting. So 3 weeks ago, we had the meeting. These minutes reveal what Fed members discussed during the meeting, their views on inflation, the economy, and interest rates, clues about future policy decisions like a rate hike or cuts. Even though the interest rate decision is already known, the minutes provide deeper insights into the Fed's thinking. Traders look for any change in tone. Is the Fed more concerned about inflation? Are they becoming more cautious? That's why volatility spikes when the minutes are released. A slight shift in wording or sentiment can move the US dollar, gold, stocks, and crypto within seconds. Bottom line, be cautious around FOMC meeting minutes. The reaction can be fast, sharp, and emotional, especially if the market is caught off guard. Okay, so that is what is going to happen at 2 p.m. today. You're going to get the summary of the minutes. Okay, if you don't understand that, then I cannot help you anymore. Okay, I can't. Tony, blue tie, purple tie, no tie. No tie today. No Powell today. It's no tie today. Okay. It is 1:35. Okay, so I'm just gonna get off gold now. Okay, so we'll do some top down. We'll get ready for the minutes. I'll come back to gold later on. Okay. Let's do NASDAQ and US 30 quickly. Get it ready for 2 p.m. And then we'll call it a day with YouTube, and we'll continue for the next 2 hours in Zoom. We're going into power hour and the close of the market. Okay, so I'm now just shifting focus on NASDAQ and US 30 right over here. Just top down on both of these securities. I'm going to do them a little bit faster. Okay, starting on the daily. Okay, look at NASDAQ, new all-time high. Okay, you can see our previous all-time high zone was right there, stretching it into the future. We got volume above it now, so we're gonna go green for this zone. Have we retraced back to test this previous all-time high zone? No, we're kind of diverging away from it. Okay, so now above here, this is all-time high territory. You know, sometimes you got to do a little price discovery analysis yourself. But if there's already some points of interest to look at, there's already some points of interest to look at. Where's our new resistance? Right there, to the bodies and today's wick. That's our new all-time high resistance. Today we did hit a new all-time high. Microsoft hit all-time highs. NVIDIA hit all-time highs today. So those could have been contributors. 22,945 is our new all-time high, just shy of 23,000, okay? Do we have maybe a daily point of interest, okay? I would place maybe a line like right in here. I make it yellow to kind of acknowledge that we had a body, a body, a body, a body, a body, body. You can play around with it whenever you like, you know, that's your choice. I'm just placing it down at this recent bodies Monday and Tuesday. Monday's closed, Tuesday's open. Is there you know how I did a little red zone? Is there a green zone somewhere inside the market above in case it retests this? I would say maybe somewhere like right around here in this body of volume. That could be where we get some daily support where we do not retrace in here, where it makes a higher low in there. And now I start to see we do have some daily consolidation on NASDAQ. Daily volume bullish, comes back down bearish, goes back up bullish, comes back down. Coming back up, it could definitely go back down, but we could also break. Okay, so just looking at this now, today's daily candle, can we find some points of interest, highs, lows? Where's the volume trading right now? Looking at yesterday, it opened. It was initially bearish, higher low from Monday, so we got a weekly higher low. It continued to push up. It didn't take out the previous day, Monday's high, got rejected, and we closed right there. Okay, so yesterday's closing price and today's opening price. I don't see any gap up, gap down. So when we opened right here, 22,735, it was initially bearish where we came down there and we made our low of the day. There's our purple line on NASDAQ. And you can see it's relative above this low. So it is technically, if you want to draw a trend line, we are pushing up. The buyers today came back up to the opening price, filled the body of the candle yesterday, filled that high. You can mark yesterday's high as a point of interest. Right now could still hold as support 22,800. And then we see it even filled up Mondays. We created a new weekly high and more importantly, a new all-time high. Okay, so that's our new all-time high. I could place a purple line for the high of the day, but I'm going to do orange for the new all-time high up there. Okay, and what happened when we got up there? Sharp rejection, sellers pushing it right back down. We do have a little bit of bullish volume still left in our candle. We're going to find out if yesterday's high, which was resistance, is now going to be support in the market. If we lose that, maybe we'll come back down to the opening price or maybe hold a little bit of volume inside here. Okay, so that's what NASDAQ looks like on the daily. Going to the 1 hour, let's see exactly what time we hit the all-time high and what happened. You can see right here when Wall Street market opened, it was a big bullish push. It transitioned into 10 a.m. That's what made the all-time high. And then you got a big bearish candle coming all the way right back down where we're retracing right back up. So just off of that bearish hourly candle, can I find 50% of it? Right there, the white line. Okay, I'm on the hourly now. So white line representing the hourly. I can go off of that, figure out my hourly zone is right there. Okay, and I see that we're trading in it right now. So are the sellers going to continue to reject this move down, or are buyers going to push it back up? Okay, so you see we're slowly making our way back in there. 11 a.m., 12 higher high. We got a retest right there, still holding 50% of that hourly candle, trying to build, but we don't have a new higher high. It was like in that gold trade that I was just in. It wasn't creating any new higher highs, so the sellers pushed it right back down. Now breaking down these hourly candles in the 5 minutes. Okay, so look at the 5 minutes. There was that big push at Wall Street. And then you start seeing some consolidation, and then what goes up can come down just as fast. So if you're in a buy at Wall Street and you didn't do anything, it came all the way right back down. It's kind of consolidating, choppy. I don't really like scalping this type of volume or these bars. I kind of trap and consolidate all of this, got kind of pushing up. What I do is I measure the zone. If it's enough to scalp, okay, it's 30 pips, not bad. That could force me to close trades in profit, go to break evens. That gold trade that went up 14 pips, it just wasn't enough to do anything. So the market came down and hit my stop loss. It's all good. That's trading. Now, inside here, I'm going to wait for this. Like what I see is it came up, rejected sharp right there, neckline at this daily point of interest, coming back up. Is this again going to be a double top and then they bring it back down and then sell it down? So going to come down here, build a higher low, and then we're pushing through here this afternoon. Okay, so right now it's real choppy. Absolutely going to wait for those FOMC minutes to come out in the next 20 minutes and see what's happening. But right now, just kind of choppy. Trading around here. We'll add our daily bar indicator. There it is. We opened, we made a low, made that new all-time high, and since then got rejected. 9 EMA, we're above the 9, and 200, we're above it. Okay, so that's NASDAQ right now. We'll let it continue to consolidate. I'm going to do US 30 real quick, and I'm going to do US 30 just a little different style. Okay, so what I'm going to do with US 30 is I'm going to use our daily bar indicator to kind of show you guys how you can do a faster top down. So right there, that's our daily bar indicator. It's basically identical to NASDAQ. So do we have an opening price? Yes, our opening price is right here. I place a yellow line, okay? Point of interest, opening price. Do we have a low of the day? Yes, we do. We can identify it with the low wick. That was our low of the day. I can look back when it hit the low of the day. Right there, it tagged it. So it was at 21:30, right over there, 9:30 p.m. Eastern. We hit the low of the day. It came back to the opening price, and then you see the big bullish volume. which majority of it was during Wall Street, pushed all the way up, and there's our high of the day, but it's also the all-time high. Okay, so right up there, purple, orange, whatever you want to do. And since then, we got rejected back down, and we're trading right here with this bullish volume. Okay, it hasn't closed yet. Okay, we got still we have 2 hours plus to go into the close. Now, do we have some structure on these 5 minutes, like within here in this zone? Yeah, what I can see is right now that's been formed in the market. So sometimes when bodies have already printed, it's kind of easy to identify that right there when it came back up, it pushed down. I can see that there it came in, closed above, kind of made support, took us to that big all-time high. And since then, we came right back up and rejecting it back down. We do have a lot of support on the 5 minutes at our opening price. You can see right there, caught a few wicks in there at the opening price and bounced back up. So are we going to come back to the opening price? We'll see. But right now, what I like to see is, will the buyers of NASDAQ, of US 30 close it above here, retest this, then we could drive, points of interest on the 5 minutes, trade back up to here. Again, if I'm measuring pip-wise to break above here to get up there, that's about 60 pips. Not bad. If it continues to drive, you can see it could fill those wicks and drive into 50% of that bearish candle right there. So that's where I would have another red point of interest right there. And then finally, will it continue to go up to the highest point of the day and more importantly, the all-time high? So we'll see if it can get all the way up there, okay? So those are points of interest above me. I also have points of interest below me. As it came down right over there, kind of found some good support right there. So, I have a red line there at 44,346. So I can watch right now. The buyers are trying to break this zone right here, and we'll see if they can close it above, retest this, maybe push a little further up, or it will get rejected and come back down. So just putting these two side by side with the 9 EMA, we're above it, and the 200, we're currently right here. I'll put these two charts side by side like this, and we can watch both of these, okay? Trump is speaking, again, all about tariffs right now. We should have the lowest interest rates. U.S. Trade Representative Greer, we still see a lot of tariff and non-tariff barriers in Africa. Okay, Trump might be moving into Africa now with tariffs. You get a tariff, they get a tariff, everyone gets tariffs. And gold, okay, so let's see what gold is doing. Came back down, okay, to this supporting area, and there's a bounce, there's a bounce, there's a bounce. So it could come back up. Again, it could consolidate in here. I would look for bullish volume to close back above here, 3,313, maybe to continue push up. If it loses this, it could definitely continue to trickle down back down in here. Okay, so we've got a few securities set up. We can continue to watch these. Okay, Okay, so Nasdaq is really kind of coiling up. See, bearish, bullish, bearish, bullish, bearish, bullish, bearish. Okay, it's in this tight zone. We know that it's not going to continue to trade in this zone from, like, let's say 830 down to 800, this 30 pip zone. It eventually maybe will break down a little further down, or it could definitely break to the upside. Similar with US 30 as well. So both sides are accumulating right now. You got the buyers accumulating, you got the sellers accumulating. Eventually that volume will be redistributed, probably at 2 p.m. With the FOMC meeting minute summary will be released. So if you do engage in a trade prior to those minutes, just use proper risk management. Understand that there's going to be some volatility. You could possibly make some good profit, and you could also get stopped out. So just do not risk too much. Okay, that's the best plan to do if you're going to trade going into high impact news. Otherwise, wait for after the news is released. Okay, so we got US 30 breaking out here. Let's see if we can have a new higher high breakout. Let's see if we can get a body close above here. All of those things that we do, let's take a look. And gold. We'll continue looking at gold. Gold is still building inside here. Okay, so you notice how US 30 did not push for a new higher high or close above there. So I will not be changing that zone to green because we didn't get a closing body. We're trading in it as of now. Wow, see Amazon? Amazon Prime Day sales fall 41% on the first day of the 4-day event. Holy shit. That's a big drop in sales for Amazon. Okay, this could be an impulse candle breaking out. Again, if you're going to trade an impulse candle, make sure you have rules regarding trading impulse candles. If not, wait for body to close to confirm anything. Okay, so gold is continuously, might be pushing down, creating a new low down there. Watch for maybe a possible fake out for gold. If it does break this, maybe come down, look to see if it actually closes below there. Will it get a wick? Will it get rejected back and then come back above here and trade up? Or will it actually physically close below there, retest this, and continue to drop down if it does break this zone? This is what started the big bullish candles right after they released the 10-year bond auction. Okay, so that might get tested. Right now it's kind of just consolidating. And US 30 did break out for a new move above here, but will it close above there or will it get rejected back down? Okay, That could be making two tops up there. Came up, back down. There's the neckline. Came back up, second top. Let's see now the reaction. Same with Nasdaq. It came back up and they're pushing it right back down. So you can start to see there's a little bit of volatility now. We're about 6 minutes, 7 minutes away from the summary coming out. Okay, so 40 seconds going into the close. US 30 is making a bullish move up here. And NASDAQ is attempting this point of interest on the daily. This 22,800 could possibly break and close below there. Maybe see further push to the downside. But again, guys, just pay particular attention. Okay, you got 5 more minutes to go. Not just FOMC summary meeting minutes, but you also have a new 2 p.m. candle opening in the markets. For some securities, that 2 p.m. candle is a new 4-hour candle as well. So again, with higher time frame, brings in momentum, brings in more volume, brings in change of direction, all of those things. Okay, so just be prepared while trading that. Okay, so that US 30 candle did close bullish above there, so I'm just momentarily flipping the red zone to green. In case it comes back down to retest this, I want to see if it will hold as support. Are we going to continue to move up? Will it get rejected and come back and close below there? And then will we get that next leg pushing down bearish, or are we going to continue to hold and move up? If you want to trade prior to the summary, again, like I said, just use proper risk management. That's it. We don't know what will happen, how the markets will react until they actually release the summary. Are they going to be dovish? Are they going to be hawkish on inflation, on labor job reports, on tariffs, on everything right here? So it's going to be coming out at 2 p.m. right here. Okay, it looks like gold might continue to break down. Okay, so we've got about 2.5 minutes to go. And then you're going to get the summary. It will affect all securities, yes. Okay, so gold is breaking down. We'll be watching indices going into the 2 p.m. Okay. and it will stick around for 5 minutes, and then at 2:05 we're going to wrap up YouTube. We appreciate you guys joining today, and just remember, hit the like, subscribe to the channel. Join us tomorrow again, same session, 12 to 4. We'll be doing tomorrow first 2 hours again on YouTube, and then we're going to go in the Zoom for the remaining 2 hours, going in power hour into the close of the markets. Okay, so we got 90 seconds to go into 2 p.m. Is anyone in a trade in any one of these indices prior to 2 p.m. and news? Just please, guys, use proper risk management. That's it. That's all you can do. Don't over leverage. Don't over risk. If you do pick a side, buy side, sell side, whatever it is, just use appropriate management. That's it. You might hit a trade. You might get stopped out. But when you get stopped out, you don't want to just give back everything or blow up your account or just do those unnecessary, silly things. Okay? It's not that complicated. Okay, so you see the big rejection on US 30 coming all the way right back down. Okay, so again, it didn't close below, could come back up, but now you should be seeing a little bit more volume in these candles now due to the summary minutes right here. Gold is still pushing down, so it did close below here. So just for maybe if I look for a future trade, I'm just making it red, continuing with these zones, stretching them in the future, and just going back to NASDAQ and US 30 right here. Okay, so big bullish candle coming right back up. Again, it could be an impulse break and continue to go, or I'm just going to wait for this full body to close in the next 4 minutes. I know I might miss out on a bullish impulse break, but that's how I got stuck with gold on that last one. I took that impulse break, it went up 14 pips, I didn't do anything, and then it came back down and stopped me out. So I kind of don't want to do the same thing again with one of these indices, unless I get a full body confirmation closing above. Maybe I can catch a pullback. Maybe I can continue to trade with this uptrend. But regardless, I'm going to wait it out for this 3.5 minutes to close out. Okay, so hopefully we'll get some news here regarding right here, Fed minutes. Several participants said the Fed funds rate may not be far above its neutral rate. Okay, so you might see some breaking news come in here. If there is, we'll read it together and see what's going on. Okay, so it did come up bullish. Okay, again, just regarding that wick, lower high, pushing down. Same with NASDAQ, opened, came to that trend line right there where those upper wicks are and got pushed down. We'll see where the body closes in the next 2 minutes. Okay, so more coming out, guys. I'm going to read this fast. All participants viewed it as appropriate to maintain the Fed funds rate at the current target range. Okay, so I repeat, all participants viewed it as appropriate to maintain the Fed funds rate at the current target range. Participants agreed risks of higher inflation, weaker labor market conditions had diminished but remained elevated. Participants observed that uncertainty about the economic outlook had diminished amid a reduction in announced and expected tariffs, but overall uncertainty continued to be elevated. The New York Fed FOMC chief says market participants survey respondents see February 2026 as the end date for balance sheet drawdown versus January 2026 in the prior survey. Okay, so that's what's coming out right now. The body's going to close in 1 more minute, 60 seconds to go. Okay, so this is really important. All participants viewed it as appropriate to maintain the Fed funds rate at the current target range, which is 4.5%. So you probably know that Trump is pressuring Powell to lower the interest rate either a quarter or 0.5%. And right there, you start to see, we're reading a little bit of the summary, that it doesn't look likely, okay? Just continuing with the news. Fed staff saw higher real GDP growth for 2025 than in the previous forecast and saw inflation lower than the prior forecast. The New York Fed chief said that market participation survey respondents see the Fed portfolio at $6.2 trillion, or about 20% of GDP, reserves to be at $2.9 trillion. Okay, so we're seeing a little bit of bullish volume on NASDAQ and US 30. Here's the close in 8 seconds. Okay, so will we get a retest coming back down, or is it just going to continue to be bullish and continue to push right back up? Okay, so if I'm waiting for a pullback, I'm waiting, somewhere around 50% of that body, somewhere if it can retest this green zone. Will I get it now or right when they're releasing the news? Probably not. Will it be 15 minutes, 30 minutes later? Possibly, but it's up to you if you want to just buy the continuation off of this candle, or just patiently wait for if we get a pullback. Okay, so gold came down to our hourly point of interest, this 3307. Okay, so it's coming back up, coming back up, coming back up. But notice still the pressure of the volume pushing it down. Will we get a closure kind of above here? Maybe 3310 could look for a continuation to the upside on gold. And we're getting a good push on the indices right now. I'm waiting for maybe a possible pullback buy at the zone around here. Anywhere from 44,415 to 400, somewhere right around here. Okay, gold has a nice bounce off of this hourly position right here. But again, will we get closing volume above here for confirmation, or will it just come up and get rejected back down? So we'll keep an eye on gold and both of our indices right here. Okay, good push on gold. So you see 3,308 here at this hourly position was still holding good hourly support. We'll see where and how this body will close. And just keep an eye on the hourly breakout on NASDAQ, getting up to 22,850 right up here. Man, Yeah, that was a good candle. But again, I was waiting for a pullback. I didn't get it. So I kind of don't want to just buy this candle just out of FOMO, just out of fear of missing out. And I don't really care if I miss out. That's the difference between me and FOMO. If I miss out, I don't give a shit. There's other traders that get really stressed out that they miss this candle. I don't. I honestly, I'm saying that as truthfully as I can. I don't care that I missed out on that, because if you scalp the markets daily, you're going to get multiple opportunities to trade, right? I'm more inclined to take a pullback buy, and I know I missed out on this candle. It is what it is, okay? I just kind of measure it, and I ask myself, would I have done anything at 30 pips if I took that candle? Possibly, but maybe I wouldn't have done anything. So I don't know. Would that come back and hit my stop loss or my break even? If not, I could just continue to wait. We haven't retested this zone as of yet. They're releasing the minutes. US dollar is dropping right now, so we start to see the markets and gold rallying right now. If you guys are struggling with fear of missing out, you got to overcome it at some point. Okay, I'm telling you that. If you keep trading every single day, that your fear of missing out and you're buying these candles, these highest points, and you can't wait for a pullback, it's going to affect your trading. It's going to affect your psychology. It's going to affect your P&L at the end of the day. So if you need to learn, start learning discipline to grab a pullback. Okay, and learn that if it doesn't come on the next candle, it might come in the next 20 minutes. It might come in the next 30 minutes. It may be there in an hour from now. It might be there tomorrow. But, look at that candle, how it came all the way up that 30 pips, what I was just saying, rejected it back down. It could come back down where it opens, could turn into a shooting star, and eventually come back down. So that's what I always say. Would you have done something if you scalped that candle and you were up 30 pips? You got to have a plan when you're trading. All candles. Break, retest, impulse candles, make sure you have a plan. Okay, so gold did close right at that zone, okay, above it actually. So I'm just making it momentarily support right now. Can we catch maybe a pullback buy on gold to retrace all the way right back up to this red zone? I like to measure the move prior to taking trades, just so I know if it flips. Could fill the wick again, 8 pips, get up to fill all those pips, 10, maybe get back up to here is about 20, 25 pips if it can continue to drive bullish in that range up there. And guys, in about 5-10 more minutes, I'm gonna just take a quick little break. I gotta use the washroom, and then just grab another drink, okay? So in like 5 minutes, we're just gonna take a quick little break. Yeah, Powell wants to wait and see. He's been wanting to wait and see for a long time now, and Trump is pressuring him to just decrease the rates. So, but we'll see. Again, that's all developing news. Trump also wants to replace Powell. If Powell doesn't agree with what Trump wants to do, we'll see. It's all developing stories. Okay, so gold's got a nice retest candle. I'm going to see if it can come back down one more time and maybe possibly take a buy on gold. If it respects this zone, it's a doji candle. See how it's coming down bearish again. I want to see if it can load up on a few more pending orders and come back up. And I could be looking to buy gold back up to take it back up to 3,313. Okay. Okay, so you see that bearish doji candle just continuing to build. As soon as it maybe flips bullish and can still hold that green zone, I'm going to look to maybe buy the continuation to go up to that red zone at least, okay? So I'm going to go in for a buy on gold. Placing my stop loss, okay? So I see a wick, a wick, a wick. That's that hourly support level. I see that last retest was kind of right in there at 1145. So maybe I'm gonna increase my stop loss a little larger, okay? So you see I'm placing it below that hourly position right over here at 1140, where it dipped down and caught those big buyers and then the retest. And since then, higher lows, higher lows. So I'm placing my stop below there, looking to definitely come into this red zone and break maybe for a new high of the day, okay? So about 50 pips, what I'm looking for to the upside with my stop right below there, okay? So I'm in a gold buy, and I'm just going to take a quick washroom break, and then we'll come back. I'm just locking in my stop loss just in case I get tapped out while I'm in the washroom there. Okay. So I'm in a buy on gold, testing it back up to go up to continue to trade with this bullish daily volume. Maybe it can pull back and continue to advance its way to the highest point of the day, okay? And also maybe if we get a retest coming in here on US 30, I'm just going to place an alert in here. Okay, guys, when I just jump to the washroom, just go to the washroom real quick and grab a drink. What charts do you guys want me to leave it on? Gold or the indices? Which charts would you guys like it left on? Guys on Zoom, what charts would you guys like it left on? Gold? Okay. Okay, so we'll leave it on gold. I'll be back just a couple minutes. I'm just going to go to the washroom real quick, and I'll be back in just a few moments, okay? Hopefully we'll see gold rise. Okay, guys, we're back. Let's see if Goldie can push a little bit here. Okay, so just measuring the move. What do we got so far? Okay, so 13 pips right now. If we can get into that red box, like right around 22 pips in there, then maybe we can start to reduce a little bit of risk. But I'm looking, to kind of maybe push, up to here, 3,313. Maybe attempt a new high of the day, but we'll see. Okay. So let's continue to watch this as it's developing. And just a recap on NASDAQ and US 30. Okay, so NASDAQ did impulsively break above that hourly resistance and kind of get pushed down a little bit. US 30, it came back down. You see where I had my alert right at that red line? It still hasn't triggered. Oh, came really close. Might have to continue to wait on getting that. Okay, so let's see what's going on here. And guys, news. Okay, any new news coming out here? Okay, so this just came out. A couple of participants noted they would be open to considering a rate cut as soon as the July meeting if data evolves as they expected. Fed minutes, some participants said their most likely appropriate path would involve no rate cuts in 2025. Okay, so we'll keep that in consideration. Guys, that was a beautiful bullish 5-minute candle, like on gold, just relatively low pullback, closed near the high. So if we pull back, let's just identify 50% of it is right there. Hopefully we don't need to pull back into it. Maybe we can get a nice bullish bar developing. We've already filled our wick. Now we just got to continue to drive maybe into the red box, get 20, 25 pips up there, and then maybe start to reduce risk a little bit. Okay, guys, on YouTube, if you guys wouldn't mind hitting the likes button, we're staying a little later, by popular demand, we stayed a little later here. So hit the like, subscribe to the channel, and maybe you can, with the likes, you can help drive gold a little bit more bullish up here, okay? Again, guys, manage the trade yourselves. Do what you got to do. But let's see what's happening, because we are trading in a red zone, okay? We are pushing up. Right now, 20 pips. Okay, so there's 22. Up to the top is about 25 pips. Okay, and it's going to close in 3.5 minutes. We got a lot of time, but we got 4 nice bullish bars that are moving off of the hourly support. Okay, so those 5 minutes are looking good off of that hourly support. Just a recap of why I bought this. That bullish candle broke impulsively, closed above with the volume. I waited for this candle to come down. I see the retest, and then as soon as it flipped, that's where I bought. Okay, so now we're moving 25 pips right now in profit. This is going to be the determining factor. Are we going to close above? Because look at what we're hitting. We're hitting this hourly kind of, remember that hourly consolidated range right here? That's what we're hitting right now. So we're going to break a little higher. Okay, 30 pips is right there. Okay, can we break with some volume and close above here and build off of this continuation? Will we be able to make this red zone green? And if we have to come back down and retest this, maybe we could build a new higher low and drive to the highest point of the day. We're not too far away from it, from hitting the high of the day. The high of the day is just under 3,315. Okay, so we should all be up at least 25 pips right now. You can manage your trade management yourself. If you'd like to reduce your risk, you can go to break even. That's all up to you, okay? How often do we stream, Lenny? Every day, every day. If you visit stocksnipertrading.com, we've got our live schedule there. every day. Not just myself. My partner Dave streams daily as well. Okay. Guys, let's watch this close. It's going to be very important. Look at how close we are to hitting the high of the day and breaking for a new high. Very, very close. You know, we got to assume that there's a lot of sellers up here maybe protecting this high of the day and maybe want to push this down. That's why it's critical if we can close with good bullish volume above here so that we can flip this zone back to green and maybe possibly build off of this. We've got a minute and 18 seconds to go, and it's really bullish. So hopefully maybe grab him move 35 pips on this thing. If it does close above, okay, so I'm verbally telling you guys, if it does close above and I flip this green and we get a good retest and we're driving for the next push, I'm taking my stop loss and I'm going to break even because then it will be up 35, 40 pips if it does close above. So I don't want to jinx it, you know what I mean? See, we broke above and now it's coming back down. So where will this volume close? Okay, that's going to be critical to continue this trend moving up, or are we going to pull back down and build off of this? Okay. So now we have 30 seconds. I always say 30 seconds is the deciding factor. Who's going to close this candle with the momentum? The buyers or the sellers? So far, the sellers have rejected it back down. Okay. Now, where will we close? Wow, that's a nasty rejection. Okay, so we're going to lose that whole, wow, holy fuck. We lost that whole volume in that entire candle. That's gross. That's disgusting if you ask me. So the momentum is the sellers. Okay, so I can probably bet that this is going to push down even further just because of that rejection. However, if we can still hold 50% of that bullish candle, maybe it might make an attempt to continue to build. But look how much we got to continue to come back up that wick. It's not like we closed near the high and we got a short wick and we're driving. So that's a big exhaustion. And right near the close is when the sellers pushed it down. So, you know, it sucks when that happens, but it happens, guys. I'm sure that you guys have had that happen to you before in trading. It sucks. What can you do? And it was just right at the last 30, 20, 10 seconds. They just brought it right back down to the close. So buyers, again, got to start to ask to trade up here, but got a long hill battle to come all the way and come back up to that wick and create a new high. So more than likely, it's going to pull back. What I'm looking at is a pullback at 50%. It could come right where I entered the trade, you know, and I just, again, pissed away 30 plus pips. And NASDAQ and US 30, we got, okay, so remember what I was saying? If you don't want to buy those highs up there, which you didn't have to, FOMO trading, now it's coming back down to possibly retest the green zone, where if you were looking to buy those highs, now you're getting a nice discounted pullback back down into an identified zone of support. So let's see if that will play out in the next little bit. Yeah, Christoph, maybe pip and dip. Yeah, you're absolutely correct. I should have, woulda, shoulda, coulda, you know? That's me trading without a disciplined plan on that candle. Christoph, what I was looking for was when we were up here, the last minute, I was looking to close with volume above here. I was looking to flip this zone green, maybe pull back and retest it, and we were going to drive up here, and that's when I was going to do everything. It just didn't happen, okay? Last 10 seconds, that's when it came down with massive selling pressure and pushed down. It happens, guys, you know? You just got to get used to it when you're trading. I'm used to it, okay? It's not my first time trading. I'm used to this stuff, you know? I got greedy at 30 plus pips. I got greedy. Some of you guys will say 30 pips is nothing. To me, in my opinion, I got greedy up there. I should have done something. Welcome to the world of trading. The psychological game it plays with you on a daily basis. Okay, so far we are retesting 50% of that volume. We are currently right above the 90 MA. So maybe we will consolidate just below this supply zone and buyers will continue to build its way up. But I don't like the size of that wick. Okay, if it was a shorter wick, it's a different story. But with a long wick like that, it's going to take a little bit more effort on the buyers to get it back up there. Okay, and look at US 30. Could possibly we might get triggered for an alert right there. So where I placed it, yeah, right there. So we got triggered. Okay, so now I look at the time we got 50 seconds to go. Do I just want to buy right now, just as it came in there, or will I let that bar close? I'll let it close since it's 40 seconds, because similar like with gold, what if the last 10 seconds is very bearish and then it closes below there and it continues to drop down? So I'm going to wait that out. But right now it's giving me an indication that it's in that zone. So when we moved up, when you're waiting for a retracement, see what I mean? You wait 5, 10, 15, 20, 25, 30 minutes, and eventually it came back down and retested. Okay, so let's see what will happen there. I kind of don't like to take simultaneous trades when I'm in a gold trade and an index trade, but let's see what happens here. Okay, so it closed kind of right in the green zone. It could open bullish and come back up. It might come into 50%, get rejected back down. However, it could build here and continue to drive, okay? It's 2:30 now, okay? So you got a new 30-minute candle also opening in the market as well. See, if I wasn't in a gold trade, I'd probably be entering on that pullback. It's just I kind of don't like to be in two trades and flip-flop all the time. Like the volume it sucked all the volume out of this right now. It continued to build. Oh, did I miss the entry on US 30? That possible pullback? Yeah, I possibly did. Will it come back down to me? Maybe. Okay, but regardless, teaching, we're here to educate as well, not just take buy and sells all day. That's what a pullback trade is, okay? So when I was saying fear of missing out, sometimes you want to buy these high points. That's what I was saying. Just put a signal inside here and wait for it to come back to you. It did come back right in there, and then you look at the response right now. It's a bullish engulfing candle coming right out of there. You guys sucked me in with gold here. Because normally US 30 is my baby I'm trading. But this now, I gotta look at these ugly doji candles now. Okay, we just need some volume to come back into the market and start asking to trade up here. We may possibly close and continue to get that push. However, if we lose this 50%, coming back down to my entry point, maybe possible drawdown. So, got to wait for this thing to continue developing. Maybe it's in a little flag here, just moving sideways, but continue to get back in here. Maybe ultimate goal is to trade above here, close above here, so that we can flip the red zone to green. Yeah, guys, that was a proper pullback on US 30. You guys understand that, okay? We're here also, it says live trading and education. Are you guys aware or understand how it pulled back right into 50% and an open bullish ignited? Had you bought that candle, just trusting this zone, like you're up 40 pips right now, just on that candle alone. That's why I love scalping US 30. One body is 40 pips with current volume right now, okay? And with minimal to zero drawdown by identifying your zone. So that's right there. If you're having difficulty trading on entries, wait for pullbacks, okay? Holy, gold is just disgusting right now. And then now, regardless if you're in a buy or not in a buy, you're looking to see, will it close? Will this bullish volume close above these previous bodies right here? This point of interest, 44,447. Will it close above there? Build off of that. If it pulls back, you identify 50% of this big body candle and see if it will continue driving. Okay. And then we got less than 1 minute to go on the close of this candle, 45 seconds to be exact. Okay, so will that volume come back inside here? Will it close inside? Will it close above? Will it close below? We'll figure it out in 10 more seconds. Okay, so closed below the red zone. Still red. You got to give the benefit of the doubt that it might push down, continue push down. If you just want to go with 50% pullback of that current volume in that previous candle, again, grab your cut line and just place it 50%. 3,311 and 91, just below 3,312. Will it continue to hold? Will it continue to build its way back up? This could be a retest point. It could come all the way right back down and retest 50% of this candle. We already got one retest, could be a double bottom down there. If it cannot hold down there, then it's coming back to my entry point. I haven't reduced my risk yet. I haven't scaled out nothing. The trade is just continuing to be live. It's running in profit, almost 20 pips. But again, I'm looking for that 35 up there. Okay, and then you see this, what I was just talking about US 30. Did it in fact close above 44,447? No, the last, again, like right at the end, it got rejected and the sellers controlled it, pushing it down as an inverted hammer candle. So it's got a large wick. Again, it's building to continue to fill that wick and drive. It could just come up lower high and then come right back down to the green zone and look for another opportunity to hold support in there and gather more buyers, okay? So we got a little bit of a retest where it came down bearish, okay, not exactly right at 50%, again, just below it. So that's that a little bit above, a little bit below. But this is not a massive bullish candle like this one or this one. So it's hard to, still identify a zone on that candle, but it still is a zone. It's a little bit above, a little bit below. It is gathering some support, but yeah, I kind of tend to figure out 50% on the bigger, unusually larger body candles, whether they're bullish or bearish. That one is not a huge body candle, okay? But it's still respecting so far. So all I can do is stretch that red zone into the future, maybe stretch that green zone into the future, and continue to watch this build and hope that the buyers are asking to continue to trade up here. Otherwise, there'll be multiple offers here, pushing this move back down. Okay, so this is a slow build. This is one of those trades that you got to grind this one out. As long as it's still building from the bottom, that's what we need in a buy. But we need to also create new higher highs coming back up. So far, that big, massive rejection wick that killed all the momentum. And since then, it's got a lower high and a lower high. So we got a bearish candle coming down. Will it engulf that previous bullish candle? Will it close below this body, that body, that body? And then that could signal the next leg coming back down, okay? NASDAQ could be breaking out a little higher again. Look for more bullish volume to continue to close above this hourly white line, hourly resistance. It's kind of consolidating, like right in here. Look at the NASDAQ volume. Got a big flag, like right there. Okay, it can definitely continue to drive. US 30 is just dancing around here as well. Let's see if it will come back down to retest this. And that's a disgusting bearish candle. Holy fuck. So that was a powerful bearish candle that closed below 50% of that. So even if we do get a retracement coming back up, see that big candle, and that's it. Yeah, right back to my entry point. You know what? I'm going to close this trade right there, right at break even. I'm going to close it out, end it at break even. Don't want to go and draw down on this trade. So I'm closing it out at break even. You know, I was in good substantial profit at 30 pips, didn't do anything, waiting for that closure, came back down, but just closed it out, guys, at break even. Okay. I didn't win. I didn't lose. I don't want to give back more to the market. I'll look for another setup, but I don't want to play this out again. I'll wait. Again, I don't like trading gold at this time of the day myself. So I tried with that trade, but a BE. Okay. So I'll take my BE and continue to look at what power hour is going to have come up in the next 20 minutes. It could come right back up, guys. I understand that, but you know, I don't like that big bearish candle. I had my stop loss because if you lose that zone, then it's going to come back down, maybe fill those wicks. I don't want to take that loss, unnecessary loss, when you don't need to. Okay, so got out at break even. I didn't win. I didn't lose. Just wasted time on that trade. And something that I should have done on that candle coming up. I see Captain Boom in Zoom. Captain Boom in Zoom, you did well on that candle. So you're you took your 80% out at the top of that wick. I should have done that myself. You know, I'm not following any plan today. Okay, guys, on YouTube, we're going to wrap it up. We stayed a little longer. We're going to go now private for watching the last kind of trading hour into the day, into power hour, into the close. We appreciate everyone that joined. We appreciate you guys, all the likes, subscribes. Continue hitting the notification bell, and we'll see you guys tomorrow for another one of these sessions from 12 to 4 p.m. I don't know if I can do these 4-hour sessions going like next week. These are long sessions. You know, but we'll see you guys tomorrow, and hopefully we can have a better outcome tomorrow. We do have, again, in news during our session tomorrow, what do we have? We're going to be starting at noon. So we have the 30-year bond auction tomorrow. Today you saw the 10-year. Tomorrow's the 30-year. We're going to have some FOMC members speaking tomorrow. At 1:15 we got Waller. At 2:30 we have Daily. Okay, and that's who's speaking tomorrow. And YouTube, we'll see you guys tomorrow. And we appreciate you guys joining. Guys on Zoom, stick around. We're going to continue to go. We're going to try to go into the end of the day here. But YouTube, guys, we're going to call it a day. We'll see you guys tomorrow. Thanks, everyone, for joining. We appreciate you guys. Have a good day today. Guys, just give me a couple minutes. And just
Hey guys, good morning, welcome
I got my
to the
kids
live
with
session
me
of Stocks
now,
Number Trading.
like they're home with
My name is
me.
Dave, guys, my partner
There's
is
no
Ron.
school, so
Let's
I
get
don't
down
like
to
leaving
business
my
here,
kids
guys.
for 4 hours.
In on US 30, sell. Okay?
Like making
I'm
lunch
jumping
for
in.
them and things
Guys,
like
that's a
that.
100 pip drop.
I don't know if I can do
Yes,
these
we
4
caught
hour
it. Hey,
sessions.
guys,
Maybe,
200
the
pips,
morning
please.
ones are probably
Secure.
6 a.m. 10 a.m. ones. But these ones are a little bit more difficult.